Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. I'm speaking with Ian Rodgers, CEO of Jindalee Lithium. Hi, Ian.
Hi, thanks for having me.
Thank you. Thanks for coming. I think we can start our conversation with just getting your take on the current dynamic in the lithium market. What do you think is driving this, the change, the pricing, and we've seen some uptick on the lithium prices. Can you give us your take on that?
Yeah, I think what we're seeing is a rundown in prices, driven primarily between a runoff on Chinese inventory, not just inventory of lithium chemicals, but CAM and cells in the lithium supply chain in the sort of second half of last year, and that was in the order of sort of 200,000 tonnes a year in a market that might be 1 million tonnes size. So it's quite material. Yeah, then we saw this sort of run up in prices across 21, 22, and that induced a lot more supply. So sort of a mismatch in supply and demand, as well as sort of a run down in inventories. And so that's resulted in the price coming off, particularly in China. And given that they currently dominate the market, we've seen those low prices, like you indicated. There's been sort of a bump up in the last couple of days, I guess. We think there might be green shoots and we're at the bottom, but I guess time will tell. And I think for us, we're more focused on the long term. The fundamentals haven't really changed yet. Like I think Albemarle put out some forecasts in their last set of results that even with softer rollout of EVs, there's still a big supply deficit towards the back end of the decade. And I guess that's our focus. And as the market matures ex-China, we'll see less volatility due to the restocking and destocking sort of behaviour in that market. So we're really looking forward to the end of the decade.
Yeah. So you mentioned China. So the decoupling of the lithium supply in China could be a game-changing dynamic. Why is that, and how will that impact your project?
Well, what we're seeing in the United States in particular is this focus on reshoring and decoupling. I guess the US market from China in particular, or trying to build some independence there, and that's partly why our asset's strategic. But I think a lot of the behaviour we're seeing from OEMs and groups is securing offtake direct from projects that are in North America or in Australia or areas where that aren't dependent on the China supply chain. And at the moment, there is limited ex-China processing capacity to take particularly hard rock mines, but even we're obviously a clay deposit and there's yet to be an operating clay mine. But certainly from a hard rock point of view, there's limited capacity. It's being built, but over the coming years, there'll be a build-out and growing maturity in particularly the North American market, where they'll have their own separate supply chain and a different pricing dynamic, we hope, which will be more stable. And certainly some of the strategics that we're talking to have indicated that the offtake agreements that they're looking at, less linked to spot and more based around what would be a more natural incentive pricing, which I think is positive for us over the longer term.
I want to get your take as well with, you mentioned the EV supply chain, the value chain for the EV. Is the, performance of lithium in terms of supply and demand, how much of that is being driven by the EV market? And, I think we've been seeing some slowdown in the uptake of electric vehicle.
Yeah. I think the press coverage has been pretty bearish on the EV thematic. They've had, a series of really strong growth years. I think like last year was still 30+%. The year before was 60-odd%. So we're coming off a really, really low base, and the growth's actually been quite strong. There's some of the negative sentiment coming out of the big OEMs in North America. They're actually quite minor players in the EV space, and their forecasts are sort of pushing out some of their production, which affects the near term, but the longer term trajectory remains the same. EVs are a large part of the lithium demand. The biggest, particularly from a battery point of view, at the moment with the lower prices, there's been some rapid growth in stationary storage, but ultimately the EV thematic will be what really drives the growth in demand over the medium term.
So let's talk about your project, McDermitt lithium project. Could you provide an overview of that and what makes it a compelling asset?
Yep, it's a sedimentary hosted lithium deposit. It's about 30 k's north of the Lithium Americas Thacker Pass deposit in the McDermitt caldera. The main deposit is on the just on the Oregon side of the Nevada border. We sort of pegged it in 2018, and then through a series of drill programs have built up what is the largest resource in North America. So it's an exciting project. We're close and analogous to Lithium Americas. There are some slight differences, but we're sort of riding on their coattails at a certain extent on their flow sheet development and being able to sort of leverage our engineers to sort of to prove up our project. The reason it's compelling, strategic location on the doorstep of the EV supply chain, and like I sort of touched on before, this thematic around reshoring and North American build out really plays into why our asset is interesting, and certainly from the conversations with groups that potentially interested in offtake and partnerships down the line, at the scale is really attractive. Instead of having to do multiple deals on smaller assets, like our asset potentially could be a real meaningful contribution to North American supply. So I think that's what's interesting. Which, like a lot of our peers, we're trading at very low multiples. We're probably the best value lithium stock in I guess the US on a dollars per LCE in the ground component. I think we're getting marked down a little bit for our location in Oregon, but we're really optimistic about how we can pursue the permitting in Oregon, and we think we offer tremendous value and leverage to the lithium recovery.
What's the plans for 2024? Any upcoming catalysts?
Certainly. So we kicked off a pre-feasibility study in the middle of last year, and that's due for completion in the middle of this year. And so we completed a lot of the metallurgical test work, but we've got the back end of that as well as the engineering and cost estimates, as well as the mine planning work. Ultimately, we've got a very big resource, so we're focusing on the first 5 to 10 years to maximise margin and the economic return as part of the PFS. So that's going to be a key milestone for engagement with a lot of these kind of strategic groups. We haven't put parameters in the market yet, so this will be a really key piece of work and a catalyst for us. Along the way, we're increasing our engagement with a lot of the US state agencies around technical cooperation and perhaps grant funding opportunities. So we're optimistic about that, and there's none of those are confirmed, but we hope that to announce some of that towards the middle of the year, potentially the technical cooperation earlier. But we continue to push forward on that, and then I guess another milestone for us will be producing lithium carbonate as well from our test work, which will probably happen in line with our pre-feasibility study. So we've got a busy year ahead, and hopefully it's a watershed year. We get a lot of this work done in what we hope is an improving lithium market towards the end of the year and into 2025.
Right. So we're at PDAC, and you're talking to investors. I mean, you've done a pretty good job outlining your project and the why that's compelling. You're talking to investors. What makes Jindalee, a compelling investment opportunity at this time?
In the years to come, well, I think there's lots of catalysts to come. We're trading at a very low valuation. We've got a big strategic asset, and so the leverage is huge. And we've got to walk before we can run, but we've got a couple of milestones that we're working through this year. Like I said, in terms of the PFS, which we believe are going to be a real sort of value uplift opportunity. So I guess now's the time to sort of get in when the price is really low and have that leverage to the upside. And that'll be my message. It has been my message to the investors we've engaged with at PDAC.
All right. Well, thanks, Ian, for taking the time to speak to me today.
Thank you very much.
Thank you. And thanks, everyone, for watching. Join us again next time for another engaging conversation on CEO Insights.